Hello everyone, this is Gidget with the GrahamTeam at Crown Point Realty, here to provide you the 2021 mid-year housing market update. I cannot believe we're halfway through this year. It is flying by. With most states and industries and people adjusting to life after the pandemic, many of you are asking what is going on with the frenzy in the real estate market. Our buyers and sellers want to make well-informed decisions, and I find that providing factual data is a great place to start. So let's review so far 2021. Our median sales price as of June 30th is $395,000 for a single-family home. That's appreciated 21.5% year over year. That's a pretty good sized jump. Nationally, the housing market adjusted 2.8%. So what is driving these appreciation numbers? The number one answer is supply. We have a low supply. So as of June 2021, 0.76 months of inventory. In May, we were at 0.6. We had a little uptick in June. However, when you compare that year over year from June 2020 to June 2019, which were both over 2 months, we are down substantially. Again, June of 2020 and June of 19 were both considered very healthy housing markets. As you can see, the inventory trends downward. We were 8,000 units in 2019, and we're just slightly at 2,000 so far in June of this year. So this is what is keeping price appreciation escalating. What else is driving it besides the low supply and high demand? New home starts are behind on demand. What's mostly driving that is the supplies. They are unable to get the supplies, or materials have risen pretty astronomically over the last year, and also the labor shortage. So builders are having a hard time keeping up with what buyers are expecting and demanding in the market. What else is driving the demand? Record low interest rates. We're sitting about 3.25% so far May and June of this year. That's still considered record low interest rates. And so people can afford homes where they could not. Rates are sitting at about the 5.5–6% range. So this is bringing them into the market. We also have seen improved unemployment, with many of the industries opening back up to full occupancy. That's putting people back to work and back to jobs, feeling more confident in the economy. And the millennials are entering the housing years. Many of the millennials have been sitting on the fence with home purchases. They've been leasing homes or being in the apartment market, and they have now made a pretty good swing towards actually home ownership. So we're seeing a big uptick in the millennials purchasing home. As you know, many people started working from home, so that gave them more options as where they wanted to live at, or if they needed a bigger home because they didn't have a home office. So this opened up bigger demand. Also, the big flux into Nevada is California. We call it the California Exodus. There is a large population that is looking for more affordable housing. And so Nevada is one of those great states that they're moving to. So the California Exodus is helping to push our demand here in Las Vegas Valley. Who is buying these homes, and who's being able to win out on those offers? Well, we can tell you it's not just the cash buyers. Many other buyers are able to get under contract as well. However, it's not the easiest road. There are some critical economic figures that should be affecting the housing market that we're keeping an eye on. This includes lower occupancy rates on the Strip that are down by 45% to pre-COVID figures. Visitor volume is down by 57% due to mostly canceled conventions, and unemployment is sitting about 7.8%, still higher than the 3.7 pre-COVID figures. But for the last 6 months, housing demand has outpaced the impact of these factors. Why is that? Sadly, because unemployment has adversely impacted the lower income portions of our households at a greater pace than the higher income households. Now, moving on to what we anticipate for third and fourth quarter, we expect inventory to stay at low levels, maybe slightly going up to 1 to 1.5 months worth of inventory, but nothing that's going to make it move dramatically. So the other factor is demand. We keep track of demand of buyers' anticipated future demand by tracking the mortgage application of new home purchases. Mortgage applications are a 30 to 60-day window forecast of new buyer activity. In June, new mortgage applications dropped nationally by 7%. Now, this could be a 1-month hiccup. However, we feel that most of the buyers with the cash resources we've seen over the last year have made their purchase, and so we'll start to see cash purchases dwindle down. Many buyers without the cash resources put their home purchase on hold as they waited for multiple offers to come off the market. And we expect to see a slight gap between the cash buyers dwindling and the mortgage buyers feeling confident to re-enter the market. That being said, I think institutional buyers will be picking up that gap. The forecast for price appreciation, I do not think we'll see another 21.5% appreciation. However, I still think we're going to see strong appreciation in the housing market. And strong is considered anything over 5%. So I expect that we'll see that through the remainder of this year. That being said, we discussed the record low inventory levels will likely stay ahead of the demand. So pricing, that's what's going to keep our pricing appreciation there. Just an example, what we've seen over the last 6 months in April and May, we placed homes on the market when a 300 to 400,000 range. We were seeing offers in the range of 30 offers per home. In June, we put our prices, same price home. We saw offers coming around 18 to 20 offers per home. So we're starting to see the number of offers come down slightly. Still very competitive. It's still very much a seller's market at this time. Question we get asked all the time with all of the economic factors that were leading into the COVID, aren't we going to see a wave of foreclosure? And the simple answer is no. In the last 12 months in Clark County, there were a total of 278 foreclosed homes. This is only 0.03%, the lowest record for the last 16 years, in comparison to foreclosures that were at 0.476 in 2019. However, there is a factor that we did have foreclosures on a stay here in Nevada all the way up for quite some period of time. However, we also do track the default, which is the pre-indication to foreclosures, and those are also at record low levels. So what are the experts in the real estate trends saying? Blackstone, one of the world's largest private equity firms, according to Forbes, bought $6 billion in existing single-family rental properties through the purchase of Home Partners of America. In addition, they announced an additional purchase of equities that support the supply lines for new home construction. They expect to be bullish on the new home construction for the next 10 years. So the other factor is interest rates. What do we anticipate is going to be on interest rates? Because that's what's keeping buyers affordable. After hearing the Fed Reserve's reports, and of course they can change their mind, but at this point in time, it looks like they're pretty set on keeping it relatively flat through the rest of the year. One of the ways they do that, besides setting the 10-year Treasury, is also through their purchases of mortgage-backed securities, which is creating demand and for the mortgages, which then brings down the rates. That they continue to indicate they're going to continue that through the rest of this year, but pulling back maybe in 2022. So for the rest of this year, we expect interest rates to stay relatively flat in the 3 to 3.75% range. Buyers, is this the right time to purchase your home? Okay, yes, it does take some cash resources for a lot of our buyers. And those that don't have those extra cash resources, it takes a lot of patience and endurance. However, it can happen. You'll be making multiple offers on homes, but we've seen some come through after about three steps up to the bat, and they were able to get that right home. Just as long as you have those patience and endurance, then you can see it happen. So one thing to keep in mind, our team does the work of making these offers attractive to make sure we get the really big bow on that package that we're presenting. But it does make sure that but it does come down that you're competing with those cash buyers. So those cash resources are tight. It's going to be a bit of a challenge, I think, through the rest of this year. Not impossible, just a little bit more of a challenge. So it just takes a lot more swings at the bat. So if you have some patience and some endurance, then this might be the right time. If you get anxious or stressed, then it might be time to sideline it for a little bit. Again, if you can accept that prices over the next 2 to 3 years may fluctuate, and you're not looking at getting out or selling your home in the next 3 years, and you're looking at a 5 to 10 year hold, then I think this is a good time. You should be considering it. However, if you're at a 2 to 3 year hold, then I would hold off. For our sellers, it's going to continue to be a seller's market through the rest of the year. I anticipate it's all about timing and the quality of the offers, though. Not all offers are equal. The things that you need to know when you're looking at an offer on your homes is that many of the buyer's agents out there are putting anything out there. They're throwing a lot of mud on the wall to see what they can get to stick. So it takes a lot of exhaustive research and due diligence to make sure that you're selecting the right offer. And that's what a qualified agent team will do for you, is because not all cash offers are even considered the best offers for our sellers. We've actually gotten some better offers for clients that are offering over appraisal. They're more committed on the homes. They're emotionally attached to them. So those are some things that we look for. Again, also quality of the loan approvals. There's a lot of loan lenders out there that have not qualified these buyers to the fullest extent, and so their loan approval may not carry a lot of weight. So we go through an exhaustive assessment of these offers and interview the loan officers, and we even interview the agents, and making sure that the clients have actually personally seen the home. Again, appraisals are not keeping up with the offers, so therefore there is an appraisal risk. So we want to make sure that not only are they waiving appraisal, but they actually have the cash resources to pay the difference between what we think appraisal value may come in and what they're offering. And that we've actually seen the proof of funds for that. So thank you for watching our quarterly market update. Please contact us if you have any questions about this report, or you want to know what the general conditions are happening in the market as a buyer or a seller, or if you would like a personal evaluation of your home as to what we feel the current market value is. We would love to get in touch with you. See below on the best ways to reach out to us. Thank you again. Have a great day.